Jai Hind. Please be seated. A very good morning, everybody. Good morning. It gives me, Manasi, immense delight in extending a hearty welcome to all of you, especially the esteemed dignitaries, distinguished guests, and all you invitees who are present here for this special event, launch of Municipal Bonds website. NSE is सभागार में उपस्थित सभी का मैं मानसी हार्दिक स्वागत करती हूं। भारतीय परंपरा के अनुसार दीप प्रज्वलित कर इस समारोह का उद्घाटन होगा। In keeping with the Indian tradition, we will inaugurate the function by lighting the auspicious ceremonial lamp, and to do the honors, I request Shri Ashwani Bhatia, whole-time member SEBI, Shri Pramod Rao, Executive Director SEBI, Srimati Rachna Anand, Chief General Manager, SEBI, Shri Ashish Kumar Chauhan, MD and CEO, NSE, and Shri Mukesh Agarwal, MD and CEO, NSE Indices. Deepena Lokan Jayati, Deepastejo Mayaha Smritaha, Chaturvarga Pradodeepan, Tasmat Deepyajet Priye. This couplet in Sanskrit translates, the lamp is luminous, its radiance grants victory, its light imparts dharma, artha, kama, and moksha, that is, righteousness, prosperity, pleasure, and finally, emancipation. This is the significance of lighting a lamp, and hence, a lamp should be lit.
Vakratunda Mahakaya Suryakoti Samaprabha
Vakratunda Mahakaya Suryakoti Samaprabha
Nirvighram Kuru Me Deva Sarvakaryeshu Sarvada.
Moments to be treasured in the form of photographs. यादगार पल हम सभी के लिए कैप्चर हो रहे हैं फोटोग्राफ्स के रूप में. The lamp being lit, Lord Ganesha being propitiated, I request all the distinguished guests to please take their seats in the audience while I call upon Shri Ashish Kumar Chauhan, Managing Director and Chief Executive Officer, NSE, for the welcome address.
Shri Ashwani Bhatia, whole-time member SEBI, Shri Pramod Rao, Executive Director SEBI, Srimati Rachna Anand, CGM SEBI, Shri Debashish, CGM SEBI, other officials from SEBI, representatives from municipal corporations, market participants, panelists, colleagues, ladies and gentlemen. It's my pleasure to welcome you all to the launch of NSE's dedicated website for Indian municipal bonds. I extend my heartfelt gratitude to our esteemed guests, representatives from regulatory bodies, municipal corporations, financial institutions, investors and market participants who have gathered here today to support our efforts towards strengthening India's municipal bond markets. At NSE, we have always worked towards financial inclusion, investor education and innovation, ensuring that the capital markets are accessible to all. Our multilingual NSE website has empowered investors across diverse regions, breaking language barriers and fostering broader participation. NSE has also been at the forefront of investor awareness initiatives, offering education programs, compliance resources, and financial literacy tools to enhance market understanding. Previously, in 2023, NSE had launched India's first municipal bond index, Nifty India Municipal Bond Index, a benchmark designed to track performance of India's municipal bonds market. In 24, NSE had launched India's first website for passive funds to provide a comprehensive platform for retail investors and empower them to easily access information and understand the Indian passive funds industry. Today, the launch of a dedicated municipal bonds website is our efforts to provide transparent, structured, and easy to access data on municipal bonds. Availability of structured data and greater market transparency will empower investors with insights needed to make informed investment decisions. Some of its key features include municipal bond screener, access to information on new issuances, past performance, and secondary market trends, as well as a comprehensive section on Nifty India Municipal Bond Index. This initiative perfectly aligns with NSE's purpose and vision to improve the financial well-being of people by fostering a more efficient, liquid, and well-regulated bond market. The municipal bond market holds immense potential, and this website is a small contribution to help tap that potential. For over 3 decades, the National Stock Exchange of India has been playing a pivotal role in transforming India's financial markets. We have built a strong, resilient, and technology-driven ecosystem that serves as the catalyst to India's growing economy. Our effort in developing a vibrant corporate bond market has provided Indian businesses with alternative avenues for capital raising. Within the growing bonds market, municipal bonds have a huge potential to transform urban infrastructure financing. While 1997 marked the inaugural issuance of India's first municipal bond by the Bangalore Municipal Corporation, several other municipal bodies tapped into this fundraising mechanism post-introduction of SEBI regulations on municipal debt securities in 2015. As of today, 12 municipal corporations have raised 2,784 crores through 17 issuances, including the issuance of 244 crore by the Indore Municipal Corporation. The oversubscription of Indore's public issue demonstrated retail investors' appetite to participate in the infrastructure development of the country while earning financial returns. Of the 12 municipal corporations, 4 have mobilized funds through issuance of green bonds, marking a significant step towards financing climate-resilient urban infrastructure. Through the introduction of Amrut Incentive Scheme, Government of India, via the Ministry of Housing and Urban Affairs, has been encouraging urban local bodies to mobilize funds through capital markets. SEBI has been actively promoting the municipal bonds market by organizing workshops across different parts of India and creating awareness among urban local bodies to utilize capital markets for their infrastructure financing needs. In continuation of these efforts, SEBI introduced an information database and repository to guide municipal corporations on issue and listing of municipal debt securities. With continuous efforts from all stakeholders like regulators, municipal corporations, investors, and financial institutions, we believe that municipal bonds can become a mainstream financial instrument in India. As an exchange, our role goes beyond facilitating trade to enable financial innovation, market expansion, and sustainable economic growth. I sincerely thank all the stakeholders, regulators, and municipal authorities for their support in making this initiative a reality. Together, let us work toward building a robust, dynamic, and efficient municipal bond market in India. Thank you. Jai Hind.
Thank you, Ashish sir, for the initial remarks and for sharing your thoughts, providing beneficial information. I will now request Sri Ashwani Bhatia, whole-time member, SEBI, for the keynote address.
Ladies and gentlemen, a very good morning to all of you. Mr. Ashish Chauhan, officers from the municipalities, from NSE, my colleagues from SEBI, and representatives of the media, and representatives from media. So the headline you can already note it down, that the pipeline today that we have in the municipal bond market is already more than the number of issuances that are currently there in the markets. And as I speak, we already have 5 documents with us from 5 cities, Agra, Prayagraj, Varanasi, Gandhinagar, and Pimpri Chichwad. and I understand that today one more document is being filed. So we have 12 issuers already who are there with an outstanding of about 2,700 crores. And with these six, 50% addition, and the pipeline, I believe, is quite good. So we do hope that this initiative that has been taken by the merchant bankers, by exchanges, by SEBI, it's coming to fruition, and it will lead to expansion in this big space. So it's a privilege to stand before you this morning on the occasion of the launch of the Municipal Bond website, an initiative that marks a transformative leap forward in transparency, accessibility, and efficiency in India's municipal bond market. This launch is not merely about introducing a new platform, it's about strengthening investor confidence, empowering municipalities, and fostering a more vibrant municipal debt market. I extend my sincere appreciation to NSE for spearheading this initiative, which will serve as a comprehensive repository of information for investors, issuers, financial professionals, and policymakers alike. India is on the path of urbanization. It's happening at a very fast pace and unprecedented pace. It is estimated that by 2047, 50% of India's population will live in urban spaces, which will lead to growing demand for self-sustaining, market-driven financing mechanisms for infrastructure projects such as roads, water supply, sanitation, public transport, smart cities, schools, colleges, swimming pools, water supply, sewage, you name it. This is where municipal bonds play a pivotal role, as they provide an independent source of funding for cities, reducing the financial burden on states and central governments. A well-functioning municipal bond market contributes to expanding India's broader bond market, attracting both domestic and foreign investors. Globally, municipal bonds have been a cornerstone of local financing for decades, particularly in markets like America, where large-scale urban infrastructure projects have helped in the development of the country as a whole. In India, we are witnessing an encouraging momentum, with several municipalities successfully raising funds through bond issuances. However, there remains untapped potential that we, as regulators and market participants, must unlock. Today's launch of the platform builds upon a strong foundation of achievements in the municipal bond market. Let me highlight some milestones in recent years. In 2021, Ghaziabad Municipal Corporation issued India's first green municipal bonds. As I said, we already have three documents from UP. It will be the first state that will actually have 5 listings on the bond market. So I think if each state, like UP, if multiply 5 by 28 states, you end up with a number of 140. But of course, a few larger states can do much more. So I'm just giving you a kind of an average. So the success of the green bond was further reinforced in 2023, as Mr. Chauhan just said, when Indore made India's first public issue of municipal green bonds. And we know what Indore has been able to do, right? I was there about 3 weeks back. A small investment in Chappan Bazaar and a small development in Sarafa Bazaar, and look at the amount of revenue that those 2 small stretches can actually lead to, the kind of development that happens, the kind of tourists that come in, the kind of tax revenues that can actually go up. very, very small examples. We also know that they did a green bond. It was a public bond. Doing small things that have an impact is not very difficult, and we do hope many other cities do it. Taking the momentum forward, in 2024, Vadodara Municipal Corporation issued India's first certified green municipal bond. Despite these successes, the key challenge that has historically hindered the growth of municipal bonds is access to reliable, structured, and transparent market data. Investors require transparency, market data, and regulatory clarity to make informed investment decisions. This municipal bond website is a major step towards bridging this gap. This will provide issuer-wise outstanding amounts, enabling investors to assess credit exposures across different municipal corporations, bond pricing and trade volumes, enhancing price discovery and secondary market liquidity. By bringing this wealth of data into the public domain, the platform will enhance transparency, improve investor confidence, and deeper market participation. Also, with this platform, municipalities will gain visibility, investors will have data-driven insights, and the market will move towards a more structured and efficient ecosystem. SEBI's commitment to the municipal bond ecosystem. At SEBI, our focus has been on developing a robust regulatory framework to facilitate municipal and bond issuances while ensuring investor protection. We have, over the years, introduced stronger disclosure norms, standardized frameworks for credit rating agencies, measures to promote green and sustainable municipal bonds, and we have made efforts to enhance the liquidity as well. We are also looking at structures where organizations like NABFID or organizations within the state governments can provide some form of credit enhancement. If that works, we feel that all the bonds that are currently rated AA, A, or mostly in the BBB space, if you get credit enhancement, the yields come down, the cost comes down, and the municipal bond market will actually take off even more. So municipal corporations must embrace bond financing as a strategic tool for infrastructure development. The investors, including retail, institution, and foreign participants, must recognize municipal bonds as a viable fixed income investment class. Market intermediaries, rating agencies, investment advisors, and exchange must work towards enhancing market accessibility and transparency. The launch of the municipal bond website is not just a technological achievement, it's a foundational step towards an integrated, transparent, and efficient municipal bond market. As we move forward, SEBI remains committed to strengthening regulatory frameworks, fostering innovation, and facilitating capital flows to urban infrastructure. I am also sure the liquidity is adequate. Our experience in the past has been that whenever there has been a bond, it has generally been oversubscribed 2, 3, 4, 5 times. There has been no default. And obviously, municipalities don't come under IBC because they exist in perpetuity. So obviously, when municipalities function well, give good schools, give good colleges, give good hospitals, give good public infrastructure, the quality improves, the quality of life improves. Like in US, better counties are able to tax you higher also. The rentals are higher also. So if we move towards that, I think the goal of Viksit Bharat, the goal of a developed India, will also take micro steps. I would also urge municipalities to move to accrual accounting, forget cash accounting for a change. I think that is a very, very big impediment. I'd like to commend the NSE team for their effort in bringing this initiative to life and express my gratitude to all stakeholders who are playing a role in the growth of India's municipal bond ecosystem. I'm confident that we are paving the way for a stronger, more resilient, and globally competitive municipal bond market in India. Jai Hind. Thank you.
I will request Ashish sir to please step up on stage and felicitate Shri Ashwini Bhatia, whole-time member, SEBI. And we thank Bhatia sir for the invigorating words on this joyous and significant occasion, inspiring us to surge ahead. This frame, as you can see, showcases the NSE building, the iconic NSE bull, and a representation of the people of India, and the coffee table, a book of NSE, which comprises the glorious journey of NSE Thank you, Bhatia sir. I will now request Ashish sir, please stay back. I will request Shri Pramod Rao, Executive Director, SEBI, to please step up on stage and accept this memento and the coffee table book from Shri Ashish Kumar Chauhan, MD, CEO, NSE. Again, a frame depicting the NSE building, the NSE iconic bull, and the people of India, along with the coffee table book of NSE. Thank you, sir. I will now request Shri Pramod Rao, Executive Director, SEBI, to please give us an introduction to the municipal bond market in India.
Good morning, Mr. Bhatia, Mr. Chauhan, market participants, my colleagues from SEBI, and folks from NSE. I think this is a wonderful occasion for us, and I wanted to sort of just trace some of the journeys that we've undertaken. I think it was under Mr. Bhatia's leadership that we had the first workshop at NISM, and there we were just debating more than actually propounding to figure out how we can, sort of galvanize the municipal bond market. And I think from there on, we've held as many as 10 or 12 workshops across the country. And my colleague Rachna is the one who's sort of, with her team, helped organize all of those. And it wouldn't have been possible without the participation of each of the market participants who were there. So whether it was, the investment banks, whether it was the exchanges themselves, credit rating agencies, the law firms to explain, how the entire structures came together. So I'm really very grateful to all of them for having partnered with us in taking this forward. We also attempted to have one major step taken at almost each of these workshops. If I recollect, at the very first one that I said happened at NISM, somebody said, while Ghaziabad has done the green bond and so on, there is still whether there is some regulatory gap in expressly allowing municipalities to, issue green bonds. And I think within a week, my team issued a circular which clarified and put it beyond a shadow of doubt. Yes, indeed, the green bond framework is available to municipalities. So that was the kind of responsiveness I think the municipalities themselves wanted to see from us. And that is a clear demonstration of how we were committed to resolving such kind of issues. At a workshop in Delhi, we launched the Municipal Bond Repository. And this repository is hosted in a section of our website, and I requested Mukesh also that in this Municipal Bond website that they are creating to replicate some of these data points. And what it does is it's actually created one-stop shop for, if you will, for the municipalities to be able to look through whether there are regulations, circulars. In fact, I would say market participants went one step further. They actually gave us templates of the documents that the municipality may have to sign, whether with the rating agency, the debenture trustee, or the investment bank engagement letter, etc. So all of that becomes one stop, where they don't have to actually wonder where can we find and how do we know that this is the right document to look at and so on. So to me, that again has sort of been one of the items. NSE indices, and Mr. Chauhan also mentioned it, launched one of its municipal bond index at one of our workshops again. So like I said, each of these steps has sort of been taking place around the workshops that we've been organizing. In fact, at the very last workshop we held, there is a NISM course on municipal finance that got launched. In fact, all of the people who speak in it and who are training are really all market participants who've contributed to the content. And I can just share, it's free until end of March. So those of you who want to, sort of look through the course, please do that. Afterwards, it will be at a nominal cost, and which we hope again sort of encourages municipal corporation officials to look through and understand how the municipal bond and finance market works. Today marks a major milestone, a dedicated, focused website on municipal bonds, which can provide investors and intermediaries, again, a look through and ability to compare between different issuers, look to what is changing both in terms of the projects that they are doing and the kind of accomplishments which these municipalities have. With 12 issuers who've done 17 issuances, 5-6 in the wings, the results of what all I would believe have been our developmental efforts have really borne fruit. Even as the top 50 or even the top 100 municipalities can probably tap the market on their own, we have over 5,000 urban local bodies. And hence there is quite a long tail of municipal and urban local bodies that we have. The breakthrough for this long tail that I hope to see in the following financial year is really a pooled finance structure that can support such municipalities and urban local bodies under our regulatory framework. Our own regulations structurally requires pooling of all revenues of a municipality to service the issuance of bonds. It also structurally requires creation of a debt service reserve account. So it actually is designed to make, I would say a safer investment, if you will, for the investors. To me, equally, there is an objective that it always has to be for new projects which the municipality is undertaking. So in this context, maybe I should mention 2 or 3 major reforms that I see again in the year ahead, hopefully. Is one, expanding the objects of issuance, including whether refinance should be something that we should allow happening. Enabling multiple types of pooled finance and blended finance structures. Because clearly, like Mr. Bhatia said, the urbanization of India will be supported by urban infrastructure, and it may require not just public markets, but may require developmental institutions like IFC or World Bank, and also even philanthropic organizations supporting at some level these structures. And finally, creating a framework for restructuring if that is ever needed. With all the structural features that I mentioned, I hope it never comes to pass. But again, I think preparing in advance for if there is a need to do restructure, I think again should be something we should think about. I look to the day that the aggregate issuances of municipalities crosses 1 lakh crores or 1 trillion rupees. I think that's been an objective we've tried to always put across in our workshops. It is said that the journey of 1,000 miles starts with the first step. We have taken many. So now I'm hoping it just makes the journey time slow, much more faster. So again, compliments to NSE indices in launching Municipal Bond Central. Thank you again.
Thank you, sir, for your valuable insights. I will now request Shri Ashwani Bhatia, whole-time member, SEBI, Shri Pramod Rao, Executive Director, SEBI, Srimati Rachana Anand, Chief General Manager, SEBI, Shri Ashish Kumar Chauhan, MD CEO, NSE, and Shri Mukesh Agarwal, MD CEO, NSE Indices, to please step up on the stage for the launch of Municipal Bonds website, which we all have been eagerly waiting for. So the hard work and efforts finally coming to fruition.
Maybe 6-7 minutes of yours to quickly glimpse through the website. So the URL is indiamunicipalbonds.com. And as you can see, this is the landing page. Now on the landing page, on the home page, there are a couple of sections that I'll broadly cover. So at the top, you can see certain indices, bond indices. So on the left, you see AAA medium duration, then the India Municipal Bond Index, AA category bond index, and GSEC index. This is, of course, setting the context of what we're trying to do and explain the Indian municipal bonds market. Now, this is something interesting. This is like a helicopter's view of the Indian municipal bonds market, wherein you can see that which all states stroke municipal bodies have so far issued bonds and how many bonds are outstanding. So as you can see, on the right, 6 states, 11 municipal bodies, excluding matured bonds, 30 bonds outstanding, aggregating to around 2,300 crores plus of outstanding amount. On the left, you can see state-wise distribution of these bonds. So when I click on, let's say, Gujarat, I see that 3 municipal bodies have issued bonds. On the right, you can see Vadodara, having 2 bonds with 200 crores of outstanding. Rajkot, 2 bonds, 100 crores. Ahmedabad, 1 bond, 200 crores. Of course, you can go to deeper details of finding out which bond, what are the details of the bonds. We'll do that subsequently. When I click on Maharashtra, I can see Pune and Pimpri-Chinchwad issuing 1 bond each with 200 crores of outstanding. So that way I can keep scrolling to other states, other municipal bodies, and see the details of bonds outstanding and the amount outstanding. So that's one section. I'll come back to this in some time. This is a list of all the municipal bodies along with their icons. We can click here and go to the Explore Bond section, which I'll cover. Now, this is India's first municipal bond index. This is a basket of 30 outstanding bonds and how it would have performed over the last 3 years. So, for example, in this case, over the last 1 year, 100 rupee invested on 22nd March 2024 would have grown to become 108.59, broadly suggesting that municipal bond market or basket has delivered around 8.59% return over the last 1 year. Of course, I can do it for 2 years and see that 100 rupee invested 2 years ago would have grown to become 118.07. Again, broadly suggesting 8.9% CAGR compounded, 8.9 to 8.95% return per annum over the last 2 years. So this gives you a good understanding of the kind of returns that one can expect. Of course, these are historical returns from the municipal bonds basket in India. This is a snapshot of the trading activity in India. On the left, you can see in calendar year 2025, overall 13 crore worth of municipal bonds got traded, leading to around 25 lakh of trading volume per day. And then there's a news section which talks about all the recent developments in the municipal bonds market. We also put an FAQ for basic understanding of what municipal bonds are, who regulates them, taxations, and other details. So now I'll quickly go through each of these sections and tell you what kind of details are available in this. So when I go to Explore Bond section, this gives me a list of all 30 bonds. So in India, presently, there are 30 bonds that are outstanding across municipal bodies, across states. I can, of course, use the filters here for ease and say that Andhra Pradesh, for example, has one bond, which is Visakhapatnam. Gujarat has 5 bonds. And of course, I can change the style of viewing, whatever is convenient. So for example, Gujarat, Rajkot Municipal Corporation, AA rated, coupon of 7.90, maturing in 2029, yield is 8.14, face value is 1 lakh. That way, I have all the bonds in front of me, state-wise. I can go to any one bond and look at the greater details of this one bond. For example, what are the bond details? The sector classification, the ISIN details, key contacts, the risk measure, which is modified duration in this case, 3.83, which is basically a sensitivity of the bond price for a given change in interest rate in the market. The time series. So for example, I want to know what is the kind of borrowing cost movement for this particular municipal body has been over the last 1 month, 3 months, 6 months, 1 year, for example. Now, this is very insightful. Why? Because while municipal bonds are not traded often, but if a municipal body needs to raise money, it is good to know what would have been its intrinsic borrowing cost if they were to issue it today, while the bond would have not got traded over the last 6 months, 12 months, while they would have not borrowed for the last 6 months, 12 months, but if there had to be a fundamental intrinsic borrowing cost, what it would have been. Now, this comes from the daily valuations that we do. So we value 10,000 bonds on a daily basis, including municipal bonds. And this, just a moment. Yeah, this is just a proxy to that. So this shows the movement of the bonds price over the last 1 month, for example. And I can compare it. No, this is for the index, sorry. Okay, got populated. So this is how yields would have moved over the last 3 months. So while I would have, as a body, I would have never issued for the past 3 months, but I still get to know that this is the borrowing cost movement over the last 3 months. So today, if I were to issue a bond, this becomes a good benchmark for me. And of course, I can also benchmark myself to other municipal bodies and see what is my borrowing cost vis-a-vis others when I have this in mind. This shows the amount outstanding. So this particular corporation has 50 crore each maturing in 28 and 29, for example. I can open the term sheet of this bond, which is a PDF embedded into this page. So I can open the term sheet, read it. All the nuanced details of the bond are available here. I can use the compare function of comparing one bond with another bond. This is what I was talking about. And compare myself, benchmark my borrowing cost with others across time. 1 month, 3 months, 6 months. So this is all about explore bonds. There's of course more. I'll leave that to you for you to explore that later. This is the bond index page. Now, all of us are very curious to know how, as a market, as a basket, municipal bonds would have performed. Not just one municipal body, but multiple municipal bodies put together. So the Nifty India Municipal Bond Index, all details about it, constituents, number of issuers, average maturity, MAC duration. So sitting today, the aggregated borrowing cost for all municipal bodies is around 8.39, 8.4% for an average rating of AA. So that's the kind of information that you can see. Again, you can have comparisons of the index vis-a-vis other indices and see how they've performed over time. So this is a comparative analysis where 100 rupee invested in 2025, which is, let's say, let me change that to 1 year. Yeah, 100 rupee invested on 21st March 2024, how it would have grown. So in this case, you can see the color legends on the left and relate to these movements. Finally, there's market activity, which tells you what is the kind of secondary market trades that would have happened, state-wise and municipal body-wise. Now, this is for calendar year 2025, municipal body-wise. You can also see the trend in terms of how it has been over the last 4-5 calendar years. So this is secondary market trades, both aggregate and average daily trading value. This, of course, presently is only NSE. We're trying to also put BSE data onto it. And finally, there's resource page, which Rao sir was also mentioning about. So SEBI has been kind to give the repository of the literature available on municipal bonds market, and we've reflected all of that over here. So all the repository that is available on SEBI is also available here, related to everything about municipal bonds market. So that is all what I had to show related to this website. Again, thanks to SEBI, Bhatia sir and Rao sir for guiding us and giving us nuanced feedback and guidance on creating this. Thank you.
So that was the just launched municipal bond website in a nutshell. Thank you, Aman, for taking us through and explaining in detail about the website. So ladies and gentlemen, we will now have a panel discussion on prospects of municipal finances and recent budget announcements relating to infra. Just remain in your seats. We are not breaking. We are getting into the panel discussion immediately. Just a couple of moments to set a stage for the panel discussion. I will just announce the names of the panelists. So we have Shri Ravi Kini, Managing Attorney, MV Kini Law Firm, Shri Devendra Pant, Chief Economist and Head, Public Finance, India Ratings and Research, Shri Varun Kaushik, Director, Investment Banking, AK Capital Services Limited, Shri Prabhat Kumar, Head Public Finance Management, Janagraha, and Shri Santosh Tiwari, Chief Accountant, Vadodara Municipal Corporation, who will be joining us online. And this panel will be moderated by Dr. Tirthankar Patnaik, Chief Economist, NSE. So as you can see, we are almost there, the chairs and tables being in their places. A few more moments to set up the hand mics and the nameplates, and we will be set to start the panel discussion. Just a few more moments, please. Thank you for your cooperation. Okay, all good. Let us begin the panel discussion on prospects of municipal finances and recent budget announcements relating to infra. I will call upon the panelists to please take their seats on the dais, beginning with Sri Ravi Kini, Managing Attorney, MV Kini Law Firm. Welcome, sir. Shri Devendra Pant, Chief Economist and Head, Public Finance, India Ratings and Research. Welcome to you, sir. Shri Varun Kaushik, Director, Investment Banking, AK Capital Services Limited. A very warm welcome to you. Shri Prabhat Kumar, Head, Public Finance Management, Janagraha. Welcome, sir. And as I mentioned, Shri Santosh Tiwari, one of our panelists, who is the Chief Accountant of the Vadodara Municipal Corporation, has joined us online. Welcome to you.
would be roughly 200 lakh crores. Our overall debt across all bonds, all kinds of bonds in the country, look at dated securities, look at T-bills, look at state development loans, look at commercial papers, look at corporate bonds, everything combines to roughly 247 lakh crores. And in there, just one small number of 2355 crores, according to Aman's website, is where urban local bodies are. It doesn't move the needle. A couple of themes, gentlemen. I will look at these themes. So first of all, I did not want to paint a despondent picture that we are too small. I would first look at the positive side. It seems we've done, there are about 30 bonds outstanding. We have we've done a good amount of issuance in the last 1 year or so. So we will first focus on what's gone right in the last 1 or 2 years, and then what does the future seem like at this point. We will then focus on what are the broader issues on why issuances by urban local bodies have been fairly small in India vis-a-vis other countries. And the third part of the panel would be something at how does one improve credit eligibility. Pramod spoke about pooled financing, for instance, and credit enhancement, for instance. These are several things that have been done in India, but how can they be improved better? And then the fourth part would be how can we improve investor appetite? See, we know that most of the issuances have been private placements thus far, and only some now with Indore having done a green bond which was publicly placed. How can we make it, other than this website, of course, a little more interesting for investors? Because the returns are decent, as someone told to us. We get about roughly a 9% return on the muni bond portfolio. So I'll start with you, Mr. Kinney, about what's right, what's gone right in the last 2 years.
Yeah, I think to start with a lawyer with the positives is is a little difficult one.
We are breaking convention here.
Yeah. So, but I think what has gone right, the thing is that I think wherever, see, I'll tell you, when we started out, in most of the cases, my team, which is here, took about 7 to 8 months for one issue to come to, fruition. Yeah. And what that is, so therefore that was a challenge. I mean, everything, was very difficult, even for getting basic information, even, DPR to get from them was very difficult. And even permissions were very difficult. Now when you see the trend, and you see when these same municipalities which come, they, for the second time, it's much easier. And they have now understood, they keep their books well, their financial data is available, so they know now the checklist of what to do. So therefore, you will see that as this goes forward, right, there will be a game changer. Because see, again, it is not just, I think we have to look at the overall scenario. You have to look at first when the government started concentrating on urban local bodies, right? It was by way of smart cities, right? So smart cities, the initiative didn't do so well. Mm-hmm. Now there were reasons for why and the reasons are very common. Now that the first step actually was if they would have done municipal bonds or something where the municipalities bring their house in order, right? There is structure within the municipality. There how accrual system, like one of the SEBI full-time director actually mentioned, that the accrual system, there's cash
accounting to accrual
accounting. There. So therefore so these are the small steps for the first, when you do a first municipal bonds and you do a second municipal bond, you really, at a particular, there's a developmental stage. And then this will also, again, I think if, will help into bigger changes, in terms of smart cities, in terms of those things that will happen. So this is the first baby step, but I think it's a good step.
Thank you, Mr. Kinney. Dr. Pant, your thoughts?
I think it's broadly similar. I'll give you an example. Way back in 2008, when the JNN-URM was started, Jawaharlal Nehru National Urban Renewal Mission, and under which 65 municipalities were rated across the country. The challenges we faced is we got the ledger entry of 4,000 line item for a year and 5 years data, no consistency. Half of the places, the income is given in the net form. Revenue generated, expenditure done. On the revenue side, there's the net. And I'm not taking the name, but I'm talking about a metropolitan city of this country. That was the state of affair, and which as a rating agency we had to face. And but if I look at from 2008 and now 17-year journey, because one of the reform in the JNN-URM was like you auditing reform, you go into double entry system. There was very soft nudge, like you move away from GIC, LIC, because if you go back and look at what was happening at that point of time, it was the GIC, LIC, HUDCOs of the world who was lending in, and because of that, the quality of urban infrastructure, quality of urban services had suffered. Even now, most of the smaller ULBs are dependent on center and state government for grants to undertake a project, right? But what has happened is, at least when we look at the accounts and coming from a rating agency, and if we have assigned a rating unless we know the balance sheet last 5 years, 6 years, or 3 years, whatever. If we don't know the balance sheet, if we don't know how the flows are coming in, we can't do anything. So the biggest thing I have said is that the nudge from the central government and SEBI coming with the regulation, 2015, some changes and all those. So this is what has happened, and I think there's the change. Still, lot of it is required, because if you're talking about improving Indian urban infrastructure, I'm sorry, 50 cities are not urban infrastructure improvement in India. It has to go to tier 2, tier 3. And as we say in Hindi, the mufassil town, the small town where 50, 60, 70 or 1 lakh people are living. If we are able to, and then we are able to improve the quality of life there, because that will reduce the influx of population. You guys are from Bombay, I am from Delhi, and both the cities are facing the same challenge. I have to drive 40 kilometers to reach to office. It can take anything up to 3.5 hours even. 1.5 hours is given, and can go up to 3.5 hours. So if we are able to develop cities around it, we'll be able to do it.
No,
Thank you.
Point taken. The policy imperative that has happened in the last several years has been a key, key push, a key nudge towards getting more and more cities, to issuances, and it has to be from a vicious circle to become a virtuous circle. We did get the idea, as Mr. Kinney also pointed out, about smart cities, but it took some time before the idea sort of took up. And the theme I'm also getting is standardization of information, from what Dr. Pant pointed out. That also helped. Mr. Kaushik, your thoughts?
Your question has a few points. One is in terms of the number of issuance till date. One of the point was that in terms of the size of the issuances, why they have small issuances of 200 crore or less than 200 crore rupees. So the basic logic behind all municipal corporation that there is one incentive scheme from Government of India which is limited to 200 crore rupees. So they get incentive of 13 crore rupees per 100 crore rupees up to 200 crore rupees. So, and in case if they are going for a second tranche, if there is a green issue, they will get another 10 crore rupees per 100 crore rupees. So all municipal corporation, whether it's a big municipal corporation like Pimpri Chichwad or Surat or Chennai, so they are restricting themselves to 200 only because of that. Only one municipal corporation, they have exceeded that limit to 244 crore rupees by Indore Municipal Corporation. Second issue behind that, see, we are working with the municipal corporation since 2015 after this smart city mission. The basic reason we have noticed that their spending requirement is very limited. Whatever they are collecting through the property tax and user charges, they limit their expenditure to that extent only. Once they will start expanding their infra requirement, their borrowing will be increased. As of now, total borrowing of all municipal corporation is around 13,000 crore rupees. If you talking about 5,000 ULBs across India and 13,000 is the outstanding amount, you can assume that what kind of infrastructure activities they are taking up. Only now, of late, all few municipal corporations that Indore, they have done the public issue just to install a solar power plant for their captive consumption. This is something out of the box. Now, like Ashwani Bhatia sir said that 5 municipal corporations, they have already filed their documents with SEBI for clearance. Another 5 are in line. We are going to file Chennai maybe in next 2 hours. This is in final stages. Out of other 4, there is again one public issue. So now municipal corporations expanding their infrastructure requirements, and once they will start increasing that, their property taxes and user charges will never be able to meet that requirement, and they will always require to tap the market maybe in the form of term loans and bonds.
So property taxes in a city like Mumbai are about, correct me if I'm wrong, roughly 40 basis points based on the stamp duty ready reckoner rate. So 40 basis points is what you pay as property taxes. And clearly, if you have a similar metric across cities, and then you have a 200 crore incentive scheme in place.
For example, that if you see the current budget of BMC, it's massive now. It's
70,000 crores.
Somewhere around 1 lakh crore rupees.
Okay.
They are carrying some huge fixed deposit for last many years. You will see that fixed deposit will go on in next maybe year or so. Because now they are in the mood to do infrastructure activities, and whatever they are carrying, all big municipal corporations, they keep saying that we are into surplus. They are into surplus because they are not doing infrastructure activities. You will see in case of Mumbai that once they will start incurring whatever they have planned in their budget, 100% they have to take money from the market.
So municipalities have generally been very conservative at this point.
Because of their mandate, because of their constitutional, because they are all constituted under 243 article, and there, if you see the activities assigned to them, it's quite comprehensive. Not only for water management and sewerage management, they are also responsible for infrastructure activities, non-conventional power. There are many other activities are defined which is maybe required for the citizen of that city. Now ULBs are improving themselves, and maybe now we are seeing the 10 ULBs suddenly in last 5-6 months. So we are hopeful that maybe in next 6 months we will see another 10-15 will come into the market.
So this is another theme I want to touch upon later on in the panel about how will ULBs contribute to bridging the infrastructure gap in the country. Mr. Kumar, your initial thoughts, please.
So I will take a step back and overall 3 things I see changing. One is political economy itself of urban. Second is landscape change in transparency on financial information from ULBs. And the third is overall kind of key activity, coordinated activity of players like SEBI, NSC, Ministry of Housing and Urban Affairs, to a certain extent DEA. So the first, political economy, now urban is a political agenda. CM's central government is putting their money as well as intent behind urban, and that we are seeing from like a state which has large urban population, Uttar Pradesh, is kind of going for bond market where chief ministers are setting ambitious targets for their cities itself. They are realizing India no longer lives in rural the way it used to. There is a significant urban constituents, elect voters. The second one is urban is key for economic growth. If you are not able to fix cities, the economic growth will face challenge. And it's starting to show where cities are not able to meet the expectation of both ease of living or ease of doing business. Right. That is struggling. Each city is struggling if you take a step back and see. Delhi is struggling with air pollution. Same with Bombay as well. Air pollution, congestion, Bangalore. If we are not able to fix our city, we might not see the growth that we have seen and that politicians have started realizing. The second one is landscape change in transparency, and this has been a journey for 20 years. Due to the 15th FC condition, if a city doesn't publish its financial information, and within that they have kind of said you have to publish income and expenditure statement, balance sheet, schedules to them, and audited report. Then there won't be cases where a city's financial statement is a two-line. It's a detailed financial statements. Around more than 95% cities have published their financial statements. There is a lag of a year and more that might be bridged with coming few years. You all can go to Mahua as a website, cityfinance.in, that we also have contributed to. All 4,500 cities' financial statements are in PDF format. Of that, around 24 or 2,500 cities' information are in standardized format. Anybody can go and see. So that's builds investor confidence, transparency, and there's not hidden behind many documents where you don't even know what's happening in a particular city. The third is coordinated kind of play of actors that they are working together to push the market. And that brings, SEBI has done so many conferences, now launch of the NSE website. So these all will build trust in the system, where people will work together on issuing more.
Kumar, very interesting points, very interesting points. In fact, urbanization is serious. I mean, we are the world's most populous, economy. We had roughly 18% urban population in the 60s. And when I started my career in the late 90s, early 2000s, it used to be around 22%. Today, India has about 36% urban population, 36%. Roughly 51 crore people live in our cities. Just let that sink in. A city like Mumbai has roughly, 22 million, 2.2 crore, 2.3 crore people. Delhi would be slightly larger. The NCR region has roughly 4.5 crore people. But if I look at the country, we are looking at 51 crore people. So Mr. Kumar's points that, without looking at our cities, how do you make 51 crore people live in terms of ease of business, in terms of ease of living? You have to look at a long-term growth path for us to achieve Viksit Bharat status by 2047, and that has to go through our cities, making our cities livable, from a long-term perspective. Mr. Tiwari, your thoughts, your initial thoughts, please.
Am I audible, please?
Yes, you are. You are.
Yeah. Thank you, NSC and all team, for inviting me on this very meaningful session and launch of the municipal bond website. Regarding this urban local body and their functions, as per constitutional amendment, there are 18 functions which urban local bodies has to perform. And believe me, mostly all urban local bodies are in itself is a mini government. We have water ministry, means department, which can be termed as ministry, sewage, social things are also there. Women empowerment is also there. So many things we have to provide the facility of garden, we have to provide the road infrastructure, flyovers and everything, plus so affordable housings are also there. So lots of huge capex requirement is there actually. See, the performance cannot be compared on the basis of spending actually. World Bank has come up with the norm that around 10,000 per capita capex should be there for the urban cities. So we have to see where we are lying actually. When you would be comparing the per capita cities, you would be saying that none of the cities are up to the 50% marks also. We are lying somewhere around 40% or something. Even bigger cities are not touching 50%. So requirement is huge, but as you have already mentioned that there is lots of urban pressure. So the population shift towards urban has increased suddenly, but the infrastructure hasn't been done. Meanwhile, creating a infrastructure is not only the option maintenance of the same is also there. And for maintenance, we have to see the capacity of the urban local body also. What capacity in terms of manpower, technical capacity, and after that maintenance capacity. Infrastructures can be created within 2-3 years, but to maintain from where the revenue will be coming, we cannot charge hefty taxes from the public. So we have to maintain the balance. And I do not agree with the statement that urban local bodies are conservative for spending. Yes, the speed has increased up because the revenues has also gone up in last decades or so. So the thing is that we have to balance. Infrastructure development is not only the focus, maintenance and various other social schemes are also there. So nowadays this is increasing. Regarding bonds, the new initiative which urban local bodies are going on, we came up with the bond in March 22 when the economy was slow, Ukraine-Russia war was going on. Still we had a success. And after that the buzz was created and Varun said that already 5 has filed and 5 are in line. So there is a good scope for municipal bond. This is what I would like.
Sir, I will come straight on to my next question to you, if I may. You mentioned there is a lack of capacity in terms of maintenance. It's not just the spending in terms of expenditure, but also maintenance in terms of that capacity. Could you throw some light on what are the hurdles against creating such capacity?
The major capacity is the funding only. Whenever, if any infrastructure is created, you can 2 to 5% is the operation and maintenance cost which is going on. And urban local bodies, all projects are not revenue generating projects. See, within a city you cannot have a toll. Okay, for water also you cannot charge heftily. So, and for treatment also. So, this is the main thing where because the urban local bodies are almost spending 45 to 50%. Means urban local bodies like Vadodara and Mumbai and all that, they are spending around 40 to 50% behind the establishment cost for manpower, salaries and all these things. 20 to 30% is behind O&M. And so for developmental work, they are left with 5 to 7% or maximum 10% only. So this is the main reason that if we increase the manpower to provide better service, then the cost of establishment also would be increasing. So this is the balancing the revenue and maintaining the expenditure. That is the bigger task. Regarding this institutional capacity that I said, that manpower also, we can take a number of the works at a time. But the quality, whether it would be maintained or not, that also we are, because we everywhere, same kind of the person with same technical capacity could not be present everywhere. So we have to implement the work in city by considering the SWOT analysis of respective areas and all these things. So this is what I feel.
Thank you, Mr. Tiwari. Let me put forward this question to the panel. So we have a constraint on capacity. We have, we've had traditional conservatism, but right now the idea is more on how to have a balance between what you're getting in terms of revenues and how do you, show that in a more meaningful manner so as to look at future better earnings. Now, the question to all of you gentlemen is, now that the bond environment is getting better, as I got from all of you, do you think with more sunshine on, city finances, as Prabhat you also sort of pointed out, do you think this balance would get better over the next few years? Will cities be able to make their balances between what they have in terms of resources and what they're expected to do in terms of provisions to their citizens will get better? Anyone could take a stab at this.
I hope we are not getting into spending without keeping an eye on revenue.
Not at all, which is why, sir, you are
so
there.
what Varun has said, they are conservative. He has said it from that point of view. We don't want anybody, individual or a government to be a reckless spender. The problem is, and you may have seen, See, from post-independence till now, there has been committees after committees which has recommended that the user charges should be levied, and they should, if not the principal, at least recover the interest payment on that debt. Now, I don't think in my memory I have seen any project where even the interest charges are recovered by the levying of user charges. Let's accept it. That's the state of affair. If we keep our eyes closed from that, we are not doing a justice. We will have 1,001 seminars like this. SEBI has done 10 or 12 last year, right? NAPFID has done many. NSC is also doing. If we are closing our eyes from the reality, I'm sorry, we will not achieve anything.
I think the idea was doing exactly the opposite.
We have to. See, you gave example of property tax. I come from Delhi. You know how much property tax I pay for 950 square feet flat?
No, kindly enlighten us.
392 rupees per annum.
392 rupees for anyone who did not hear this.
Per annum, not monthly. Now, if that is the charges which is being levied, user charges, from where the municipality is going to improve infrastructure? Because if you read any municipal act, most common is BPMC, which is in the west. In the north, you will get Punjab Municipal Act, and based on Punjab Municipal Act, Delhi and other municipalities act. Every municipal act talks about the municipality can increase property tax after a gap of 3 years. But first, the commissioner will not propose it. Even if commissioner proposes it, standing committee dispose it. So I am paying the flat 392 rupees from last how many years, I don't know. 12, 13 years since I have bought that house. Now you have to, I'm sorry, we say there is a lot of willingness. If you use any survey, any consumer, any consumption good, whether it's a good or the services, people are ready to pay for it, right? User pay survey you do, people are ready to pay for it, provided there is the quality of service which is delivered. Norms are 135 liter per capita daily water to be supplied, 100% municipal waste to be lifted, segregated. Each Pakka road should have a storm water drainage. Now, in the Delhi city, there are 12 authorities, those who have the ownership of road, and ownership of storm water drainage is with the same authority who has the ownership of the road. Make storm water drainage.
Sir,
These are the real challenges. And these has to be addressed to improve urban infrastructure.
No, point taken. But the question again to the panel would be this. We have 13,000 crores outstanding across all municipal bodies. We have only about 2,500 crores in bond outstanding. How do you see this picture changing over the years? And let's head from there.
See, I've already briefed that thing. Unless they will increase their infrastructure requirement. Now, for last 2-3 years, the things are changing. See, we compare ourselves, as Mr. Pant has said, that if we are, for example, if we compare ourselves with the US markets, US municipal bond market, there is no comparison actually. They are 4 trillion plus, only municipal bonds.
Yeah.
So their corporations work like commercial entities. See, all infrastructure can't be a social infrastructure. You can divide between a social infrastructure and a commercial viable infrastructure, wherein you can earn something. And yes, municipal corporation, their major top line is in terms of taxes only. So they need to increase that also. Once they will start developing infrastructure, and once they will start increasing their revenue also, then we will see the surge in volumes. And we are seeing that surge. Maybe next 1 year, we are seeing that thing.
So the point I was trying to drive here, I mean, I will call the glass still half full in the sense that if more and more cities, first of all, what from Mr. Prabhat's point, first of all, their finances are available in the public domain. From what Dr. Pant, you pointed out, things used to be very, very difficult earlier. And there is an investor appetite in terms of the paper that's already out. and there is a sustained chance of people making money over long periods of time, then do you think things are likely to improve on this front?
In terms of investor appetite?
Yes.
See, it's a, in terms of investors, as of now, whatever issuance, as per, I've seen that 30 outstanding issues are there, but I think there are 17, 18. I will see the website. I think maybe since 95 we have taken the database. Major investors are PF funds, and in case of Indore Municipal Corporation, we have done one experiment that was the first public issue in the country. So we were the lead managers to that, and in one public issue we got application somewhere around 9,200 from various class of investors, retail, HNI, corporate, QIVs. Otherwise, all other municipal issuance till date, they were private placement only, and number of investors are limited to mainly to PF funds.
Yeah.
See, PF funds are invest as per their cash flows. They keep mostly into HTM category, held to maturity as per their cash flow. Major investors, if you want to increase the appetite, then the major investors will be maybe mutual fund, insurance companies, or maybe traders, and retail HNIs in case of public issuances. In case if SEBI or NSE, parallelly with the organizing workshops with municipal corporations, they have done 12 conferences in the last 3 years. If the similar workshops can be done with investors, and just to take their feedback, because most of the insurance companies and banks, they are not mutual funds, they are not investing in. Banks are investing, Bank of Baroda, Bank of Maharashtra, SBI, we have seen their exposure. Now infrastructure institutions like IFCL and NAPIT, they have also took some exposure. So investor appetite will be increased from investor side. Once their investment policy will be changed, then that demand will come into the picture.
So apart from investing policies, apart from, so more information is now available. There are cities that are doing it. It's understood that from a bond financing model, if you shift to a bond financing model from a traditional debt model, you have to put out far more information than earlier. Do you see the policy environment changing, Mr. Kinney?
So I like to add here, see the issue, I think the quality of the product, right? And at the end of the day, when you're financing, you have to look at the quality of the product. So what is lacking, I mean, in terms of, it's not about how much are you spending, what are you spending it on? That is the question. Mm-hmm. The first thing I think in the municipalities, what needs to change is that the capacity to plan has to change. So right now, even if you look at Mumbai, right, let's take, it's one of the richest municipalities. Yes. And you look at who is doing the work, it's all MMRDA, right? So the bigger work, I'm saying, the planning, so there is the capacity to plan is lacking within the municipalities. And if they do that, let us say, I'm giving you an example, concrete examples, like if a municipality needs it's a lot of energy, right? You need a lot of electricity. Now, even small like towers in Mumbai have started putting in money and started doing solar projects where their cost of energy has gone down substantially. Substantially. Yeah. Now, as a municipality, you can do it and you can fund it today. You can ask money for that, right? It is also a green initiative. Of course, that's another completely different this. But today you can fund it and say, look, one thing is to generate revenue. Of course, we are not as lucky as Delhi. In Bombay, we pay a lot of. So I am planning to move to Delhi with the numbers that he's talking about. But the fact is that there are the quality of what you are going to do. That has to be the crux. If you plan things, so financial planning, infrastructure planning, cost planning is done at the municipal level, there will be funds, there will be finance.
Yeah, that theme is coming out very clearly.
To add, sir,
yes,
the role of MMRDA or similar agencies, say we have DDA in Delhi or Urban Arts Commission, so building bylaws, city development plan, all those, because this will not be a city specific. So the development plan, how the city will evolve, this is always around the area. right? So one can't think of, okay, I'll develop Delhi without thinking about rest of the constituent of NCR, or I'll do only Mumbai without leaving aside rest of the MMR. So those, because no, the moment we get into that, we are looking at a situation, ULB government, same as the state government. Because the development plans are done separately. They're the development authority. Their job is just that, to plan it. They develop by many places. If you go to the other cities, they will develop an area. Once the area is developed, everything is functional. Then those areas will be handed over to the municipal corporation, so that from that time onward, municipal corporation will take over those. And that's the development model across the city in India.
Prabhat, you wanted to say something?
So I think I see a very positive picture, and the positive picture is and I think I agree with the point that Mr. Ravi made. Cities don't have a plan, and I don't mean the master plan or something. If I give any city today, take this 2,000 crore and spend in 2 years or 5 years, they won't be able to.
So that capacity theme that Mr. Tiwari was speaking about is all pervasive across.
All pervasive across country. None of the cities have a shelf of projects. Okay, this is what my city, and I think I will link this to the conservative line of thought as well. None of the cities have, okay, this is what I need over next 10 years or 5 years or 15 years, this type of infrastructure do I need. Then leading to, okay, if I need to build this type of infrastructure, what is the money that I need? How much of money would come from property tax? How much money can come from user charges? What type of money would come from central government, state government, and where I need to tap the bond or I need to tap World Bank or some other sources, and different type of projects can be funded from different sources. Does any city in India have such plan? I would be surprised if one or two have. So that's where I think where we need to, if we want to see the bond market or any municipal borrowing market or even infrastructure financing to pick up or PPP, cities first needs to have a plan. Okay, this is, and the starting point can be top 80 cities or top 90 cities which have more than 5 lakh population. At least they start with that thinking. Then we need to have the capacity within the state government, and I would say within the state government to start with, so that they can support other cities as well, where people can understand raw financials, project finance, where you can say, okay, what kind of the revenues, how do I speak to different market players, or even to understand what type of projects are best financed by what type of resources. So those kind of capacities we need to create if we want to take the market to a greater scale, or the scale that we want to do that. Then there is a need for strengthening state level institutions, intermediaries. Just looking piece by piece thing reforms might not help.
Might not work.
So,
fair point.
And this is happening actually. If you think Assam has recently created a centralized agency, Urban Infrastructure Finance Development Corporation, who do certain kind of activities. Other states, UP is also looking forward to strengthening its UDIFC or setting up a new. So many states have started thinking in those directions. It will be up to, we have to see where does it take. The second thing I want to say is it's not just about raising the money, but it's also deploying the money.
That theme came out very clearly. It's not about funding.
Deploying the money, I think, and there where I think some of the, and we have to learn from, urban has to learn from rural actually. There is much transparency in rural. I can go to a app and I can see what happened in my panchayat, what type of projects were undertaken. I can see the photo of those projects. Those things increase kind of citizens' confidence. If I as a citizen, if I am able to, or like Bombay, you guys are paying a lot of property tax. If you are able to see what's happening with that money, what kind of projects were taken in my neighborhood, whether I am feeling good about those projects or not, that will lead to kind of overall confidence where I am ready to pay more taxes or more user charges.
So in public economics, we have something called rational voter ignorance. You know, we will spend a lot of time checking out which watch to buy or which phone to buy, but we will probably not see what Prabhat is basically saying. Good point. Mr. Tiwari, you wanted to come in here?
Yeah, actually, regarding this investors' appetite, I would like to say that in India at present for municipal bonds, there is no much investors' appetite actually. If you look at the subscriptions, then you would be saying that. Reason for that is that why municipal corporations are also not going for the bonds, because the highest rating which we are being allotted is AA plus, and when we have a AA plus we get the funding between 7.50 to 8.50 something like, and that is also higher cost. The options which traditional funding options we have, in that also we get fund at less rate. State PSUs provide us the funds at less rate. So the admin cost and compliance cost, and when it is added, then the cost of borrowing increases. So our submission was to the SEBI and other that at least urban local bodies AAA rating should be allotted so that the cheaper cost funding is available through borrowings, through bonds. This is the reason actually, because we are the public body, we are working as a trustee on behalf of public, so we cannot borrow on high. At present incentive, Varun said that incentive is that, yes, incentive is that reduces our interest cost by 2% approximately. So the urban local bodies are going. When we would be getting the fund at 8.5 or 9% and 1 or 2% would be the borrowing cost, this admin and compliance cost, then you can see that then this would not be justified for us.
That's again a good point actually. So which brings us to this theme, the theme that we were initially, we touched upon it, but the time now to discuss more about it. Credit enhancement, as Mr. Tiwari has been saying, and let's link it with other themes as well. It's not just the large cities, as many fellow panelists pointed out. It's not just the large cities. The large cities have a giant budget. They can do some things. Of course, more information will be very helpful. But what do we do about the mufsil towns? So one part from Mr. Tiwari's point is what your thoughts, panelists, on credit enhancement, and second, on pooled financing. How do we come together so that a more cohesive picture is provided, a better risk diversification is provided to the investor, and also, the costs. Costs are, again, Mr. Tiwari's point, that every cost sort of adds up, right? So if you come out as a group, the overall legal costs, Mr. Kinney, overall legal costs also come off. It's already very low. So some thoughts on these fronts, please. Mr. Kinney, we'll start with you then.
See, I think, from my point of view, I think...
So how feasible is credit enhancement, and how feasible is pooled financing?
Again, pooled financing, I'm getting at that. See, what is happening is that if you're pooling, right, what is also happening is, again, I go back to my, the quality of the product, quality of the infrastructure that you are funding. So I think when as a person who's financing, right, I would really like to see transparently where my money is going, what is the kind of returns that I'm getting, or it is the debt, but at least they are able to generate a profit. They are, there is a transparency to that. Now, in the pool financing mechanism, which is still not, come, but in the mechanism, I would love it to see. I mean, what I would love to see is there has to be a transparency at the local level. So when you there are 30, 40 small municipalities will pool together, but each one of them, what are they using that money for? That is important.
Use of proceeds, utilization is important. Yes. But don't we have examples from Tamil Nadu and Karnataka already, Dr. Pant?
Yeah, we had first pooled finance bond in India, which was guaranteed 50% by erstwhile USAID for principal. Since then, there had been, I think, 4 different issuances. They got into some issue with the SEBI because what Mr. Bhatia and ED was also talking about, whether refinancing, some of it was refinancing, so they got into listing and all those. Keeping aside that, so they had done maybe some 20, 30 municipalities in the different tranches. Biggest, and this was, mind you, this was the bond rule. The biggest silent pooled finance is happening in Karnataka. 500 small municipal bodies under Nagarothan project. program within of the government of Kerala,
Karnataka.
Karnataka. But that is happening in the bank loan route.
All right.
That is happening because you have, as Mr. Prabhat was saying, no depository. So they have these entities, TNUI, IFSL, KUIDFC and all those who are intermediary, government intermediary in the sense, they are transferring it to 500, taking the bank loan. They have the power to tap State Finance Commission devolution. If the municipalities are not paying to that, then what was talked about ED like Dasra and one interest, one principal and all those, by that your risk is being minimized. It's minimized. It is unlikely that if there are 30 constituent municipal corporations, like all 30 will default at one go, right? If one or two have any issue, but the surety they have is whatever the money is coming from the State Finance Commission devolution to the municipalities, they have the power, they can tap it. And that's how the investor gets the confidence, whether they will get money back or not. That is, now again the problem comes. Unfortunately, none of us want to pay tax, right?
None of us want to pay tax.
None of us want to pay tax.
No, I do.
No,
Please.
because the problem comes whether the entity who will be the pooled finance entity whether it will be a trust route or a company route. Because if it is a trust, they will not be able to pay taxes. If it is a trust and doing the refinancing, it's a PTC. Whether PTC will be allowed by SEBI to be listed. If it's a company, they have to pay tax. They can list it. So there are these kind of issues which the state government, because ultimately it's the state entity under which the municipalities are doing it. The state government, SEBI, regulator and all those, they have to sit, decide and finalize it. What will be the route? Whether we'll go by the trust route, whether they will go by the bank loan route. And that is the way, because if a small municipal corporation who needs say 5 crore rupee, right? Now whether it's 5 crore, a municipal corporation will do all these things and go and do a municipal bond.
No, not really.
Right, you gave the answer.
Yeah.
30 coming together, 200 crore, right? So that is, the risk is getting diversified.
Definitely.
And that's the answer, but I don't know why, because I still remember 15 years back for 3-day conference in Bhopal for MP. All market participant, led by Sujata Srikumar, your ex-colleague Mukesh, right? All market participants there. After that, what we say in Hindi, Nilbate Sannata.
So I have to ask this one question here, just a question here. I mean, one part was that you pool finances and then you go for a bank loan. But the other part is you pool finances can also issue a bond. What are the arguments against that or for that? Mr. Varun.
See, in terms of, that first pooled bond came in 2010 and after that in 2015.
2002, TNUDF.
That was in, okay.
2000.
Okay. So after that, I'll speak post 2015.
Yeah, sure.
This municipal regulation came into picture in 2015 only. Right now, there are 3 state governments, those who are working on pooled mechanism. I will not quote the names because they are into the discussion stages and
Sure.
they are already discussing with SEBI also. See, regulations are quite clear that you can go ahead with the pooled mechanism. But certain things they are not very clear, because in case if you are going for example, 100 small municipalities or to pool and to raise funds in one SPV. So they are slightly, SEBI people are here, but they are still asking one question that whether we are going to do the due diligence of all 100 municipalities. So that is the major concern and they are in discussion with SEBI. In terms of credit enhancement, I will see there can be a municipal corporation credit enhancement and a pooled credit enhancement. In terms of municipal corporation, SEBI mechanism in terms of credit enhancement is quite strong. 1-year DSRA sinking fund. For example, if you are doing a 5-year paper, at the end of first year only you are going to give the liquidity of 30%. 20%.
You need a 1-year DSRA, sure.
1 year,
Yeah.
and 20% will be sinking fund. many other states, they are taking many other mechanism for credit mechanism. UP is coming up with 3 bond issuances. 2 they have already done. So there is a cabinet approval. There is a fund called IDF there, Infrastructure Development Fund. In case of certain contingencies, that fund, that money will be transferred to the escrow mechanism. That is the initiative taken by the UP. Now the same is done by the Tamil Nadu government, that they have created a revolving mechanism that so and so money will remain available during the tenure of bonds. In case of certain contingencies, DSRA will be replenishment.
And can you, before I throw upon the, to the audience for more questions, can you tell me for pooled credit enhancement, how things are happening?
Pooled is always better. See, as an investment banker, if I have to market a certain thing, in a pooled mechanism, I am working very closely with the state government. You are transferring a asset to a SPV. You are transferring maybe their property taxes to a particular SPV, and there is a agreement signed between all ULBs and the government and trustee that so and so amount will be automatically transferred as per the standing instruction to the particular SPV. Now SPV will be rated as on the basis of that asset only.
Yeah.
So rating will be always better. If there is other measures for credit enhancement in terms of guarantee, DSRA, sinking fund. In case if a municipality is getting, I'm just giving you a example only, that in case if a municipality is getting AA, maybe in case of pooled, if quality of asset is good, they may have a rating of AA+ also.
Thank you. So the sense that, I'll not try and summarize it at the moment. I'll basically throw the, to the audience to ask any questions if they have on these discussions. Listen, I think what sense we are getting is there is a clear intent. Now, gentlemen, please. My mic.
Most of the banks, as I see, is they have comfort in lending it to these type of entities for some of the guessable reasons. But my question is, somewhere down the road, we must come with some kind of a resolution mechanism. It's that in other developed markets, I have worked in some of these North American countries where there is a solution for municipal bonds failure also. It can go bankrupt or whatever that happens. In this case, these are public assets. Most of the underlying assets that have been created is. My question to the panelists is there any asset resolution mechanism immediately in place, or at least at the drawing board stage, so that credit enhancement as well as the credit rating agency who is supposed to be giving us the comfort for putting in this type of structures and market model of finding these infrastructure is much more possible in our context.
Fair point. Anything on this?
So the states have has backstopped a little bit. So they have said if there is a default, we will provide the 3 installments or 2 installments. And so if there is a complete breakdown, then there is a question. But that the chances of that happening in a municipal kind of a situation, because government. So that
sovereign issue.
Yeah, sovereign issue. So it will be a very, but then currently what the mechanism is that the state governments are saying that, if there is a default, we will put in three months or backstops. That is happening.
Sorry. No bond as on today. The 12 existing bond, none of that has the state guarantee. And we should not go back the same way on going to the state guarantee because
I wanted to ask, do we really need a state guarantee?
Yes.
Why should we need a state guarantee? No.
There is this proposal.
There is a proposal. I don't know,
there is
but
a
as of
proposal
now,
to put it, because there is this talk.
Yes, how will we enhance the market otherwise? See,
sir,
the
simple
problem is, straight away from a AA, if you bring it down to a B grade,
So simple point is what you are asking.
Yes.
US Constitution allow a municipality to go bankrupt. Right? Detroit can file bankruptcy.
Yes.
But in India, municipality can't go bankrupt.
Cannot.
So the kind of assurance, right? If a very small municipal corporation, municipal body, you think about wherever you are staying, that was in existence 200 years back, and that will remain in existence another 200 years, right? So bankruptcy laws are not applicable to the municipality in India.
We're not there yet. We don't need them. Any other question, please? I think everybody is convinced that ULBs are the next place to invest from an investor's perspective. From
I cannot.
Yeah.
They will not allow me to invest in anything. SEBI will not allow me.
See, from a macro perspective, I'm very happy that there is enormous scope. I just see that 0.001 number, and you do 10 times and you still get to 0.01% of the overall bond outstanding. There's enormous scope for improvement. Our cities in India versus the tax we pay, not like you, sir, but the tax that we pay, we all could see, we all could, do with a better, living conditions. But if I try and summarize the debate so far, so urban local bodies today are the governments that we don't really see. When we talk about government, we look at central governments, we look at state governments, we look at elections and so forth. We don't really see that while we spend most of our times in interaction with urban local bodies, not with the state government, not with the government actually. So, this is one place which is there but invisible. It is visibly invisible. And the fact that, these finances are, the funding that, they need is enormous. The kind of funding that they take is puny. The overall funding, the overall debt by all the urban local bodies is 13,000 crores. And from that, debt is about 2,500 crores. So again, as I said at the beginning, I'm an eternal optimist in this case. This can only go up. This can't go down. And I hope, if I say this for everybody here, that with all the information that we are putting out there, all the use of technology that's being put in place over the last 4 years, over the last 5 years, with the tremendous amount of policy support that's being provided by regulators and market participants, I think things would go better in this space. And I think that will summarize the discussion for you, ladies and gentlemen. Thank you.
It's an aggregate, if you do, it's a net cash.
Because Mumbai surplus will take over all that. I agree, sir. Yeah.
So thank you for that highly engaging deliberation. So let us have a combined round of applause for all the experts seated on the dais. And as a token of gratitude and appreciation, let us felicitate the panelists. I will request Shri Mukesh Agrawal, MD and CEO, NSE Indices, to please do us the honors. Beginning with Shri Ravi Kini, Managing Attorney, MV Kini Law Firm. Shri Devendra Pant, Chief Economist and Head, Public Finance, India Ratings and Research. Shri Varun Kaushik, Director, Investment Banking, AK Capital Services. Shri Prabhat Kumar, Head Public Finance Management, Janagrah. We also thank Shri Santosh Tiwari, Chief Accountant, Vadodara Municipal Corporation, who had joined us virtually, and of course our moderator, Dr. Tirthankar Patnaik, Chief Economist, NSE. Let us come together for a group picture, sir, before I call upon you for the closing remarks. Thank you for that. And now, time for the closing remarks by Shri Mukesh Agrawal, MD CEO, NSE Indices.
Yep. Ladies and gentlemen, my panelists and my colleagues from NSE, NSE Indices, NSE Data, NSE Cogencies, a big thanks to you all for taking time out to come for the event and grace the event. And without your support, the event, it wouldn't have been possible for us to make it successful. And before I close, I would like to give a big thanks to SEBI, the SEBI WTM, ED, Rachna Madam, Divya Madam, for right from the concept to build this website and giving us and guiding us through the website development process. Big thanks to you. And big thanks to all my NSE colleagues for organizing this. And this website is powered by NSE Cogencies. Thank you. And please join us for lunch. Lunch is being served, yeah. Thank you very much.
Thank you so very much, sir. And with that, we conclude this function. Kindly join us for lunch that has been arranged in the foyer outside. This is Manasi taking your leave.